Welcome to a BW Business World Dialogue. Uh, Today we have a special guest in the Business World Dialogue. Uh, Life is about success. Success can be also about money and finance. Entrepreneurship is in the air. If you understand finance, money, then you can be a successful entrepreneur. If you want to build assets in your life, if you're a professional, you need to understand finance so that you can save well. Whatever facet of life you want to nurture, understanding of money, finance can come in handy. Today, we are going to talk to a person who I would say is a finance doctor. Dr. Anil Lamba. He's a practicing chartered accountant. He's a trainer. He's an author. He's a money guru. And he's written many best selling books over the last 15 years. Today, we are talking to Dr. Anil Lamba. Dr. Lamba, welcome. Thank you for talking to us in the Business World Dialogue. Your book came out a couple of months back, which is timeless wisdom on finance. Hopefully, today in the dialogue, we'll get some timeless wisdom on finance and life. Life and finance go hand in hand. Mr. Lamba, how did you become this person who gives this wisdom on finance from being a chartered accountant? How did I know you have a degree in law, you have a degree in chartered accountancy, you have a degree, double degree or
PhD
degree
in
in
taxation.
taxation? But how did this transition happen from being a chartered accountant to?
I don't really know. It just happened. When you ask how did it happen, that's how it happened. I passed out as a CA, decided to set up practice right away. So I haven't ever worked for anybody. Uh, Coincidentally, some offers came to teach. These B schools, tend to invite fresh chartered accountants to teach. And the first reaction was, no, I haven't done CA to teach. But then you realize if you are a practicing CA, you just passed out, everything is fresh in your mind. But if you don't get a particular client for a few months, and then if a client walks in, you might start fumbling. Your knowledge gets a little fuzzy.
Jaded.
Yes. So the only way to keep in touch with your subject is if you repeat it. So applying that logic, I accepted the teaching assignment in a B school. But then I discovered a love for it. I discovered teaching was fun. It was extremely satisfying. Then I took on hell of a lot of assignments. I used to teach full-time MBAs. I used to teach part-time MBAs. I used to teach the diploma courses because I was a new practicing CA with hardly a client. So I had a lot of time. But then as clients grew, it became a pain. I'm sitting with a client, I'm looking at my watch, I have a lecture, and lecture used to take priority because 50 people waiting for you. So I said, that's not fair. My loyalty should be with my clients. So I started giving it up. But again, coincidentally, corporate invitations started coming in. Tata Motors was my first client. That was even bigger kick because then you realize these guys are not studying to pass exams. They are applying what you are
They're
teaching.
practitioners.
So the profile changed from teaching students, which I gave up soon. Uh, Corporate then, but I used to still teach when somebody would invite me. Only the number of invitations kept growing. First they were from Pune, then they came from out of Pune, then they started coming from out of India. And this was so much fun that the more teaching assignments came in, the more I used to delegate the CA type of work, which is completely delegatable. I could even, at the end of it, just sign the balance sheet and that's it. And I had a good team with me. So gradually it grew till one day it consumed me. I realized this doesn't feel like work at all. Anurag ji, I genuinely don't feel I worked a day in my life.
Yeah, Confucius said, if you make your hobby your
Yes,
profession, you don't
yes.
have to be. And can I tell you, Mr. Lamba, I feel like the same every day.
Wonderful,
It's
wonderful.
not work. So I relate to what you're saying
Yes,
because you deeply enjoy what you
enjoy.
do.
True.
It makes an impact.
Yes.
And you also learn while you practice your craft.
Actually,
To be
that's
able
the
to teach,
true.
train, you have to prepare, you have to reflect, you have to think. So I
This
understand.
statement only another trainer will understand that you learn more than you teach in every session.
100%.
The way somebody asks you a question sets you thinking, I've been talking about this for so long, but suddenly the penny drops. Oh, this is what it means. You may be saying it, but you still haven't understood the real impact of that.
So your first book came out 15 years back. romancing the balance sheet.
Yes.
Is it possible to romance the balance sheet?
You read it, I mean, you read it, but when you read it, you realize it is possible. In fact, balance sheet people unfortunately stay away because they think it's a boring document, it's a difficult. I've always said finance is so interesting and it's a common sense subject, it's not difficult at all. But by staying away from it, you lose control over your business. How do you know where your business is going? This is like a pathology report for a doctor. But if the doctor doesn't know how to interpret that report, how will he treat patients? So every business person, every entrepreneur has to learn how to read a balance sheet.
Absolutely. Now let's shift to your latest book, which is Timeless Wisdom on Finance.
Yes.
Entrepreneurship is in the air. Everybody is a founder or wants to be a founder. Whether you're an intrapreneur running a business, you're a CEO, business head, you're a CXO, you need to understand the
Yes.
financial impact of your business and where is it headed. Give us some timeless wisdoms in the book. I know I am on your Sunday musings,
Yes.
and this book is born out of your Sunday musings.
Correct.
Give us your top three.
Ah, let's flip through any.
Yeah, I mean, I remember a couple. One, you talk about Mr. Dhirubhai Ambani saying he started Vimal and it took over Bombay Dyeing in a 3 years
To
span.
illustrate the power of finance management, people think you must know of course you must know your stuff, but they think that is the only thing required to succeed. And the example I often give is Mr. Dhirubhai Ambani, who was not even literate in the formal sense of the term. He started this textile division, and I think within 10 years they overtook Bombay Dyeing. Bombay Dyeing, who were making for a century before him. By no stretch of imagination, you can say that in 10 years' time, Dhirubhai's weaving skills became better than the Wadia family. Not at all. It was only his finance management skill that took him where he is.
Second, we have heard this saying that, success has many fathers, failure is an option. And you paraphrased it creatively and rightly in your book saying,
profit has many fathers.
Thus, loss is an orphan.
Loss is an orphan. Because it is essential that your business makes a loss. Otherwise,
it makes a profit.
It makes a profit because people forget that. People think business is about top line. Whereas business is not about top line, it's about bottom line.
Yeah.
And it's a tragedy when your top line is going up and bottom line is coming down.
You have a chapter on that too.
Yes.
You also talk about that, what do you do about goodwill?
Goodwill is again one of the most misunderstood items. I love to ask two questions when it comes to goodwill. Supposing in your balance sheet there is goodwill, anybody's balance sheet. My first question is it something good or is it bad? Number two, is it yours or is it somebody else's? Now, typical answer you receive is obviously goodwill has to be good. How can it be bad? Otherwise, it would be called badwill. And second answer they give is yes, in my balance sheet, if goodwill appears, it's mine. Both answers are absolutely wrong. In your balance sheet, your goodwill can never appear. If each of us is allowed to capture our goodwill and put it over there, our balance sheet will be inflated with meaningless numbers. So goodwill is something which you usually pay for it. If somebody is selling that business which is worth 100 crores in terms of physical items, but the guy has been running it for years, has a wonderful reputation, he demands 150 crores from you because of the extra business that will come your way because you're buying his business which has a lot of good reputation. Now you paid 150 and got back in physical terms 100. So we need to give a name. Why did you pay that extra 50? So for want of a better name, we say you paid it for goodwill. Now it will appear in your balance sheet. Whose goodwill appears in your balance sheet? That fellow's, not yours. Your own goodwill can never appear. And I always say it is probably one of the worst items to appear in a balance sheet. Somebody may have bought someone else's business and paid extra. Now imagine this fellow runs his business shabbily. He's rude to his customers. Every day he generates badwill, but his balance sheet shows a goodwill. When he goes to sell his business, will that goodwill have any value? Not at all. So goodwill should be written off from the balance sheet at the earliest opportunity. Just as physical assets are depreciated, intangible items are written off. So it should be written off.
Now, let's also you talk about employees as an asset. What's your view on that?
And mine is a contrarian view, because when
You talk about that you rent their services. Yes,
yes,
that's the kind that, you rent talent, and that's the
because
right approach.
very often employees ask me when you're doing a training program that, Anil, you said balance sheets have assets and liabilities. We, the employees of this company, are its biggest assets. Then why does our name not appear in the balance sheet? So I have a counter to that. Okay, I ask them, okay, tell me, if you buy a car, where do you show the cost of the car? They say asset side. So what if you hire the car? Where will you show the cost of that? They say expenses side. So my next question is, has this company purchased you, or have your services been hired? So an employee could be the Rolls Royce amongst employees, but what is paid to the employee is similar to hire charges, and therefore has to appear as an expense. Employees cannot appear as assets. So when people use that term, it's only a
No, well,
motivating
yeah,
statement.
motivating, and it's how you treat them, and
That's a different story.
yeah,
But
but
in the
purely from a
technical sense, from a
in a
financial
financial,
point of view, they can't
of
appear as
course,
assets.
good employees, good entrepreneurs, if I call them, they create businesses, they manage businesses, they create businesses, and they're very valuable. But purely from a financial
Correct.
accounting
Correct. They
standpoint,
cannot
and
be shown as
you know,
assets.
you also talk about the fact that the only way to run a business is to be profitable. Only two things matter: profits and cash flow. Cash flow and profits.
Correct. Profit
What?
is half the battle won. Because again, another thing many people don't understand is profit doesn't mean money. It is absolutely possible your business is highly profitable and you don't have money in the bank. It is equally possible you're sitting on huge amounts of money and don't make profits. So when a business makes a profit, that is half the battle won. The other half depends upon their ability to manage cash flow.
Yeah. You also have a chapter which says if a company has lots of money and it's lying in the bank, you don't even get good rate of interest on it. So it's not a good practice to have money in the bank. If your business is really good, it should be deployed in business.
Absolutely. There's a term called non-performing asset. What everybody has to understand is, in a balance sheet, liabilities tell you where the money has come from, assets tell you what you did with the money. All the money that comes in comes at a cost. There is no free money. Now, a liability is represented by an asset. If every liability has a cost, then every asset, as far as possible, should earn. Any asset that doesn't earn becomes a non-performing asset. So if all your liabilities cost and half your assets are earning, then that half will have to earn twice the amount to be equal to the cost. And according to me, one of the biggest non-performing assets is money in the bank.
Absolutely. We're in an era of entrepreneurship, startups, valuations. What is your take on valuation?
I think valuation is, all the formula people give you are all humbugs. First, a price has to be decided between the buyer and the seller. Then you go backward and see which formula it fits into. I may come out with any formula and say, you're not going to pay me that just because I asked for it. Eventually, you and I, as a buyer and seller, have to agree on a term. So I think those are all gimmicks used by finance experts.
Now, let me also ask you that in an era of hyper competition, volatility, in era of mergers and acquisitions, how important is governance? And what is the quality of governance you see in startups?
To answer your first question, governance extremely important. I think that's what business should be all about. So far as startups are concerned, I think almost everything else takes a backseat for them. In the beginning, they're just struggling to, trying to put that business together. And what is the most scary part is they don't even understand how important is finance management. So unfortunately, by the time they realize the importance of finance management, it is very late. So if they are figuring out the technology part, they are figuring out how to raise the funds for it, they are figuring out how to make their technology work, and everything else, I think, takes a back seat. And when a business to be successful, all the things have to come together. If you focus on only one or two things and neglect the others, you're bound to pay a price for it.
You wrote your first book, Romancing the Balance Sheet, 15 years back. You've written your second book, Timeless Wisdom in
No, this
Finance.
is the seventh or eighth
Say
book.
seventh book,
In
but
between, there are
you've
several
written
more.
books. And your new book is coming out, which is about how to be rich.
Finance for young adults and children.
Yes. Now, what has changed since the time you wrote these books? What are some of the principles that are still true and you want to emphasize it for our viewers, which are very important and something that has changed?
Finance is one subject that doesn't change. That's why the title is Timeless Wisdom. These statements were as true 100 years back as they will be in the next 100 years. Uh, so you asked me what are the important. What is the next question?
Is, what are the things which are very contextual
Huh.
to today?
Again, have always been relevant and continue to be today. Number one, I think entrepreneurs should remember business is about bottom line, not top line. Too much focus goes on the top line without remembering that ultimately you have to make a profit. Number two, they don't understand that profit and money are not the same. So unless equal attention is paid to the cash flow management, there will be a price to be paid. Number three, I think most entrepreneurs or most people think owner's money is free, whereas the fact is the most expensive source of money is owner's money. So unless they understand the cost of equity, they'll normally be landing up investing their money into areas where they are not even generating equal to the cost of capital. Number four, the biggest suicidal thing that most businesses do, which get into trouble, is they land up using short term money for long term purposes. Never ever do that. If you bring me 10 sick companies' balance sheets, probably you'll find 9 of them went sick because they used short term money for long term purposes. So,
So, what are the other mistakes that businesses make? And, what's your advice on that?
mistakes in finance are made at every level, including pricing related, including they don't understand. I wrote in one of the musings that there's a term called compound interest, which everybody understands. It has been flogged so much that even little children understand power of compounding, power of compounding. And I was writing in the Sunday musing, there's another term in finance which is as important as compound interest called contribution. Not enough people understand that because there are times where you will have to sell below cost. Doesn't matter, but never sell at a negative contribution. So these things, understanding these things will decide which companies will survive during tough days and which won't.
Again, a couple of years back, 3, 4 years back, capital was chasing in companies, and companies are burning capital to acquire customers, selling below contribution, right?
And negative
And
contribution.
negative contribution. That has changed in the last 3 years.
Unfortunately, people learn the hard way. I mean, these are things we teach everywhere. Companies, those who learn before they get into trouble, have the advantage. Those who learn the hard way pay a ultimate price at times. So,
Now, tell me, some of the things when you train, like you're doing this workshop for a large company in the next few days, when you do training, how do you prepare yourself? And give us one or two incidents where you learned something while interacting with the managers or senior professionals that you were training.
oh, I'm constantly learning. I realize the same things I may have repeated 100 times, but suddenly somebody in the audience asks a question, frames it in such a way, and you see the same thing in a different light. So only a teacher will understand this statement that every time you teach, you probably learn more than you are teaching. So that's number one. Uh, so far as preparation for a training is concerned, I'm a little, I don't know, very different trainer. Maybe I've never ever prepared in my life because the first lecture of my life, 5 minutes before I was supposed to give, I didn't know, and I got a big kick out of it. Ever since, I don't think about what I'm going to talk till I get into the class. Having said that, it doesn't mean I'll end up unprepared. Maybe because I started teaching very, very soon after qualifying. So things never got a chance to get, stale. It was all at the top of my mind. But one of the reasons I've enjoyed all this so much is because there is zero performance pressure. There is zero preparations pressure. In the good old days, one would go in with a pen and a whiteboard, and you could talk about anything you wanted to. Unfortunately or fortunately, over a time, these presentations and keynote and PPTs came in. So one would first do it with on a board, and then when somebody wants a PPT, you visualize what did you do. But these things straight jacket you. Now the PPT decides what to say next because it's going to come up the next one. So I'm still very, very comfortable if I walk in just with a board and a pen. So it gives you a freedom to talk about what you want to. If somebody asks a question, the entire talk can go in that direction.
In the book, you also talk about how to communicate numbers.
Uh-huh.
Yeah, you talk about that communication
Huh.
is also important, right?
Yes, yes,
Uh,
yes.
as a finance trainer or somebody who helps people understand finance, and uh, what is the right way to communicate the health of a company through finance in very simple terms?
I think if every time you explain a concept, if you have some real life case to compare it with, it makes a big difference. Fortunately, over the years reading up, I have got tons and tons of case studies. So every time you mention a principle, this is what you should do. That principle sound too easy. So people do not understand the what are we really saying. But then you pick up a case of a company which violated this principle and what kind of price they paid. For example, the crime of using short-term money for long-term purposes. So there's a company in down south called Subiksha, which is a chain of supermarkets, grew like crazy. At one time, they were growing at the rate of they were opening one new store every week. Then they reached a level they were opening two new stores every day. And then you illustrate what they did wrong, and the whole empire came crashing down because they were using short term money for long term purposes. So, when you give an example like this, the communication of what you're trying to tell them becomes very clear.
Well, you're very fortunate that you love what you do and you are able to make an impact in the living through that. What are your own life's lessons?
So far as finance is concerned, I think all our parents, yours, mine, they neglected this. I don't think even after I qualified as a CA, my father never listened to my advice. You don't tell me, I know what to do. And I think the result was none of them were very wealthy, or because they led a comfortable life, but they never. So you realize if you understand the principles of finance, if you in a personal life, if you understand how to invest, if you understand stock market investing, what a difference it can make. Because what each person must understand in personal life as well as business life, that if you can handle finance management well, it makes for much more comfortable living. And if you mess up, because very often you see two people, one earns more, other one earns less, but the fellow who earns less is always looking comfortable. This fellow who earns more is perpetually short of money. Why? Because he can't handle, doesn't know how to manage
So,
finance.
managing finance and investing have some intersect, if I may say.
Absolutely, absolutely.
Can you focus on that and can you give our viewers some tips on that?
The other day I was writing in Sunday Musing that if there are two people, one who earns more but doesn't understand investing, other who earns less but knows how to invest his money, in the long run, this other fellow who earns less will be far better off than the other person. So we have to learn how to, number one, how to invest. Number two, understand how inflation affects you, and therefore your investment should be in such a way that it beats the returns. Number three, you should understand how stock markets function, because that is one place that can beat inflation. You should understand the importance of beginning to invest early in life. And therefore, my book is on finance for children and young adults, because if they learn these lessons early, the real power of compounding comes in when 20, 30, 40 years have passed by. So if you compare simple interest and compound interest, 5 years down the line, you'd barely see a difference. 10 years down the line, slightly. 15 years down the line, not much. 20, 25, 30 years, there's a world of difference between. So compounding benefit kicks in when you have a long time duration. So imagine a kid who starts earning at age early 20s. He's got a 40-year time frame. If he starts investing then, by the time the fellow turns 60, 65, he's close to retirement age. If he's invested well, doesn't need to do any other retirement planning. And therefore, I love an account called PPF, where a father can open for the kids. So my children's PPF accounts we opened, my son's account we opened when he was 3 months old, because it took us 3 months to think of a name for him. Otherwise, we would have opened when he was 3 days old. Now you deposit in the child's account for the first 20 odd years, then hand over the account to the kid and say, now you start investing from your income. An account that can run for 60 years, 60, 65, we can't even begin to imagine. You don't need to do any other retirement planning. So, but these things people have to understand.
Mr. Lamba, your son is an entrepreneur.
Yes.
What have you learned from your son being an entrepreneur?
Oh, lots, lots. he, fortunately, I had a lot of confidence in his. I could see entrepreneurship oozing out of him. So when he wanted to take a break from education, I was fine. His mother was very upset, but I was okay with it. And I find he has a head on his shoulders. Even though he took a break from formal education, I think he reads more than full time students, but he reads relevant stuff. When I see him talking to anybody, I don't see him. In fact, I find him head and shoulders superior to others who are probably much more qualified. So the lessons he learned running the business, he has made his mistakes. He has paid a price for it. But I think the lessons learned from those mistakes are also such they will probably hold him very well in life later on.
What have you learned hence from him?
So I have learned. I don't think, maybe because I was in a profession and not a business, so I didn't have to take these. I didn't have to invest a lot of money, so I could go in. His business is investment heavy, but he has the sense to take decisions. He has the courage to go ahead. He was able to raise funds. I didn't today. Even today, if I have to raise 10 lakhs or 1 crore, I wouldn't even have the. I don't know how to ask anybody. I won't ask anybody. So I will not be able to do it. But these people, youngsters, understood how to pitch, how to put up their business proposals, how to, convince the investor that the money is going to be used. So all these things they learned completely on their own. He's not even learned it in college. It has come from inside.
And let me ask you, is there a bucket list that Mr. Lamba has?
I've got diverse interests, but what fascinates me, apart from, of course, usual hobbies like reading and so on, but I love to travel. We are traveling. I am traveling all the while on work. And when I'm not working, I'm traveling on holiday. We take hell of a lot of holidays as a family together. We've seen much of the world, but there is much of the world yet to be seen. So I foresee myself traveling constantly. The bucket list is to tick off every continent, every country, every place that is worth visiting. So that's what we
Apart
do.
from your own books,
Yeah.
which are the other books that you have?
I've got a huge library. If you come home one day, you'll love it because I know your love for books also. So I've got a massive library at home. I've got a massive library in the office. I read a vast variety of books. I've stopped reading fiction for a long, long time. But in the non-fiction, much are, of course, related to the field of finance, but not necessarily textbook types. Case studies, businesses. For example, I read that book recently, that $1 billion whale about Jolo, that one MDB of Malaysia, things like that. During when Enron scandal happened, I have half a dozen books on what happened in Enron. Books like Den of Thieves, book like Barbarians at the Gate, and stuff like that. So, but one is reading constantly. Not as much as I would like to read. I don't even read, I think, 5% of what I should be reading due to time constraints. But there are always, like you just told me that there is a pile of books which are on the to be read list. One hopes one day one will be able to finish those.
And my last question to you: your new book is coming is for young
Yes, it's
folks.
called. It's called.
Give us a peep into what you're saying in the book.
In this book, it's called "Start Early, Finish Rich." Uh, I one of the reasons why I wrote it is because almost every client of mine that I have, somewhere in their interactions with me, they have blurted out, "Why wasn't I taught all this when I was in school?" So they didn't learn it then. They paid a price for it. They realized the hard way, I must learn, and then they came to someone like me, spent a lot of money and acquired that knowledge. If they learned it when they were young, probably they wouldn't have made those mistakes. So that is one of the motivations to write this book. But I'm not talking down at the kids. A lot of people immediately assume, oh, you're writing for kids, you'll tell them how to save in a piggy bank. Not at all. I'm addressing them like adults. I'm assuming, since I saw my own son from 8th standard onward thinking like an entrepreneur, And he attended one of my workshops when he was at 8th, and I think he understood almost all of it. So we underestimate the kids. So I'm giving them the same content that I give to the adults, but written in an easier way, easier examples, maybe a lot of illustrations in the book. So we've taught them a bit of personal finance, but I'm assuming now soon you might become startup founders of startups. Then what do you need to know? How businesses run? How do you raise funds? What are the constitutions you can have? What is income tax? Even covered a bit of how does a nation run, taken a little bit into macro. So it covers personal finance, it covers business finance for startup founders, and it covers a little bit of macro. It covers stock market investing, it covers accounting and finance, because once you start a business you got to keep track of where everything is going. So vast range of topics have been covered, but spoken to them like adults, not looking down.
Okay. Good talking to you, Mr. Lamba.
Thank you
All the
so
best.
much.
I'm sure
Pleasure.
our readers will learn the timeless wisdom of finance. If you're good at finance, you understand finance, you're prudent, your life will be good. So I'm sure you will read his latest book, Timeless Wisdom on Finance, maybe attend Mr. Lamba's workshops. And for young adults who are watching this, his book about start early, finish rich, hopefully finish wealthy. There's a subtle difference between being rich and wealthy, and you will have a fulfilled life. Fulfilled life is not just about money, it's about good health, good relationships, experiences, and having the satisfaction that you gave it your best and enjoying what you have, being grateful for it. All the best. Keep watching Business World. Keep watching BW Dialogues. Thank you. God bless you.